everyone. This is another video that has to do with the bank reconciliation process that will be using the bank reconciliation statement in order to verify or match our cash book balance, which is the business records, with the bank statement, which is the bank's record of our bank account transactions. So what we would have noticed is that the balances, they don't always match. And because there are certain differences, timing differences, for example, there may be items that are recorded in the bank statement, but not the cash book. There are items that are recorded in the cash book, but not the bank statement. And then there are errors. So what we have been doing is we are reconciling those differences by first dealing with the first differences, which are the entries in the bank statement, but not the cash book. And how do we deal with it? By doing a revised or updated cash book. So that is what we have been doing with the activities. And after we do the cash book, like in our example here, we get a new balance. Then we do the second part and we deal with the items in the bank statement. Actually, no, the items in the cash book, 2 items, unpresented checks and unrecorded deposits. We deal with those 2 items in the bank reconciliation statement. So if that is what we have been doing, what is this lesson about? Basically, all the questions that we would have practiced, they were a certain format or structure in terms of the exam paper. So basically what we would have seen is in the exams or the past paper questions or the other activities that I would have given you, you would have seen that there was a bank statement and a cash book. Most of the time you see the cash book on top, above, and the bank statement. But the main point is that you see the 2 records of the bank account. And then what we have been doing is going into the bank statement and identifying the items that are in here but not in the cash book. And then after we have done the revised cash book to enter those missing transactions, then we did a bank reconciliation statement where we identified our unrecorded deposits and our unpresented checks. And then we would have reconciled it. And there basically what we would have is a match. So this is how the exam questions come, how they can come, and this is what we have been practicing, where we have to do the observations, the comparisons ourselves, and then match it. There is another way, and it is arguably the more popular way that CXC, CSEC would structure their question for this topic, which is bank reconciliation. And that is what we are going to do now. So in this question, this was June 2007, you see there is no cash book, there is no bank statement. What they have actually done is they have made the comparisons for us and they have written it down for us in point form. So instead of us going to the cash book and the bank statement and making the comparisons, it has already been done for us. We do the same process, the same items go into your revised cash book, and the same 2 items go into your bank reconciliation statement. The only difference is how the information has been presented for us. So basically, like for example, what usually goes into the bank reckon, not the bank reckon, the cash book, what usually goes into the revised cash book? These 5 items. Direct deposits, standing orders, direct payments, bank charges, interest received is on a check. It goes on the relevant side, whether it be the debit side or the credit side. We have been doing that and getting our balance. If you look here, you can find those same items, but written down. So for example, bank charges. Bank charges, you're seeing it there. Standing orders, if you look down, you may not see. I don't think there were any standing orders, but you get the point. Interest received, you can look and you will search and they would have told you where you get those items. Now remember, the first step is usually for your revised cash book to start with your cash book balance. Can you find that information there since you don't have a cash book? Yes. They have placed it there for you. So basically, this format is just a lot more reading. That's the difference, that instead of you going and comparing, you just have to read and get the information. For example, they state that overdrawn balance in your bank account for your bank statement is $7,225. But the balance that you need to start your revised cash book or updated cash book would be your overdrawn balance of $2,000. So you see, here is the information there. So once again, what we are going to do is to just go into a different way of presenting that information, but it is the same process. So going into it, what I usually like to do is to make notes first, but you can take each one and enter it into the revised cash book one time. But I am just going to go over the overall. Take each note and work it out. Note whether it goes into your revised cash book or whether it goes into your bank reconciliation statement. Remember, your bank reconciliation statement, 2 items you would be looking for, which would be unpresented checks and unrecorded deposits. Everything else, the items that are missing, would be entered in your cash book. All right, so that is what we have been working on and what you will see here. So we're going to take first one, bank charge. Bank charge goes into your cash book. Which side does it go into? Your credit side. Normal thing, it is the same process, same thing. So you would just go and enter it there as you are accustomed to doing. Second one. This second one is a special one, and this is why I chose this example. All of the examples that we did before, remember, there are basically 3 reasons for the differences in the 2 balances. 2 of them has to do with timing differences. Items that are in the bank statement, like these 5, but not in the cash book, we have to enter it. And then, of course, the items that are in the cash book, these 2 items, but not the bank statement, we have to enter that in the bank reconciliation statement. No example that we came across, though, had the 3rd reason for a difference in the balance, and that would be errors. So number 2, this one here, is actually the first time that we are going to encounter this. And it is actually an introduction into another very important topic, which is correction of errors. So we're just going to get a nice little introduction here in terms of that. So this is an error. The steps whenever you meet an error, basically what we have to do, we have identified it as an error. We now have to correct it so that we can reconcile the 2 balances. So the first thing, a check made payable to McBean had been entered correctly in the bank statement, but not the cash book. So that means that the error was made in the cash book. So we are now going to have to go to the revised or updated cash book and correct it. Here are the steps that I can suggest to you that makes it easier, and it will help you when you are doing correction of errors further on. Basic steps, just a suggestion, but it is a strong suggestion. First thing that I suggest would be to identify which side the error was made on. You can identify the error first and then identify the side, but I am going to show you identifying the side first, and you will see why that is extremely important. So what was the transaction? It was a check made payable, which means we did the payment. Whenever we pay money, which side of the cash book does it go on? The debit side or the credit side? And you all will know by now that payments are entered on the credit side of the cash book. Yes. So which means that the error would have been made on the credit side. Very important. So now that we know which side of the cash book the error was made, next thing, what was the error? Meaning, how much was it off by, for example? So if it is that it was supposed to be $7.98, but we entered it as $7.89, what does that mean? It means that we are $9 short. So in other words, you find out what is the difference between the two amounts. So that means the error was that we had gone on the credit side like we were supposed to, but we entered $7.89 instead of the $7.98, which means that we entered $9 less. Very, very, very important. So your error, important thing, how much was it off by, and was it less or more than the correct amount? And in this case, $7.89 is less than $7.98. So our error is that the amount, the credit side, was understated or less than by $9. So how do we correct that? Basically this. Now that you have identified the side the error was made on, the credit side, and you have identified that the error was $9 less, that means we now have to add that $9 on the credit side. So if your error is that your amount is understated or less than the correct amount, you go to the same side the error was made in, which is the credit side, and you're going to enter that $9. See, so just remember these steps. First, you identified which side of the cash book the error was made. It was the credit side. Then you can identify how much, $9, was it understated, meaning less than the correct amount, or was it overstated, meaning more than the correct amount? $7.89 is less than $7.98, so it was $9 less or understated by less. Once it is less, you go to the same side that the error was made and you enter or correct that error. So you're going to go to the credit side of your cash book and you're going to credit it $9. Nice. So just now I will show you it's actually going in, but there we have our notes, and this is your first correction of errors in bank reconciliation, but you're going to go into it more when we do the actual topic of correcting errors. All right, so let's go quickly through the rest because it's real nice and easy for it. Remember, these things are just stated in words for you. They're telling you what is missing. So check was returned, no correction made in the cash book. So this is going into the cash book. So we back to the cash book again on these 5 items. and this will be a dishonor check. Dishonor checks usually go on the credit side. That is what you're accustomed to. That is what is happening. Number 4, deposits $13,000 made in the bank account, but not in the bank statement. That is one of your 2 items that now has to go into your bank reconciliation statement, and that item is unrecorded deposits. So you see I have in red the ones that are going to be going into the cash book. We have 3 items so far, 2 of the normal 5 items, and then a correction. And now in blue, you're seeing our first item that goes into the bank reconciliation statement. And then are we going to find the unpresented checks? And yes, number 5 is unpresented checks. So there is your second item that goes into the bank reconciliation statement. And then the last, dividends of $8,000 paid directly to his bank account, shown on the bank statement, but not in the cash book. That means we have to put it in the cash book. And which of these 5 items you think it is? It's basically dividends paid directly. That is a direct deposit. So direct deposit, and that goes on the debit side, also known as a credit transfer. You would be familiar with that right now. Deposits, debit, debit, right? And there we have our notes. This is basically, if you take your notes first, now we can go and quickly enter into the first step, revised cash book. So we will come back to the correction of errors, and you can pause the video and you would see here in terms of number 2, what we just introduced you to, correction of errors. Identify the side, it was credit side. Identify the error, $9, and it was less. So therefore, to correct, if it is less, you go on the same side, which is the credit side. Going to stop there for now, but just going to mention it very briefly, but don't have it in your head. Hopefully you have the notes already. If it was more, you would have gone to the opposite side. Back to this question, it was less, so it's going to be credited. Okay? All right, so here we have our notes, and as I said, we are going to go into the revised cash book first. Name of the business, Mahabir or Mahaber, not too sure how you're pronouncing it. Revised cash book, and it's the bank account column only. You do your normal headings. The year, did they have the year 2006? I think they had it somewhere. So you start with your balance and you look at the information, and you saw that the balance was overdrawn balance of $2,000 for the cash book. Overdrawn meaning it's a bank overdraft. So which side are you going to put it on? It's going to be the credit side. All right, so it's going to be the credit side because it's an overdraft. So the June 30th balance brought down 2,000. I think they gave us the balance, the dates at the bottom of your question. So I don't have it up here, right? But when we go back and look, you will find it down there. All righty then. So June 30th, balance brought down 2,000 on the credit side because it's an overdraft. Now we're going to go in here, our little notes. We have a bank charge. Bank charge will go on the credit side, $16. Next one, the correction, our little note, it went on the credit side. You can just put error corrected or understated amount or anything like that. This doesn't matter. What matters is the amount and the side that it is entered on. So you get your mark here. You go to number 3, this on a check, credit side, 5,700. Number 4 and number 5 is the bank rec, so we're skipping that for now. We haven't reached there as yet. And the last one, a direct deposit, which will go on the debit side, $8,000. So we have done everything for the revised cash book or updated cash book. So now we're going to balance. You know, the usual, you well, I skip a line because I don't know which side it is going to be on. You draw your two total areas, make sure that it is on the same line because it has to balance. Balance means it's equal, same level. And decide with the greater total. I believe that is the 8,000. You go to the next side and you put the same 8,000. And that means that this side is going to have your missing figure, which is your balance carried down. So 8,000 minus these items, and you will get 275,000. Not thousand, $275. All right, and then what you always do is go to the opposite side below your totals, put in the start of the next month, July 1st, balance brought down to 75. And this is your new balance. Pause, you have finished the first part. What's the next part? We are going to do the bank reconciliation statement, which is the second step in the process of reconciliation. Remember, the bank reconciliation account represents your bank statement, right? So we have opened up this account so that you can. Now for this, I gave you the method where I'm asking you. So a question may ask you to start with the revised cash book balance. This here is our revised cash book balance. So this is what we are going to start with. So revised cash book balance, was it a positive figure? Yes, because it's on the debit side, so 275. What do you usually do after that? You add unpresented checks. So you're going to add unpresented checks. Where were our unpresented? Number 5. And there were 2 amounts. So you should put your working, 3,500, 2,000. Please put your working, very important. And your total, 5,500. So you add that up and you get 5,775. Next step, less your unrecorded deposits. Notice it's the same thing we have been doing. So your less unrecorded deposits, where do you have it? It's just a 13,000, so you less it. And then your answer, negative 7,225, which means that it is a bank statement overdraft. And then you can just basically go and check your information and look there. 7,225 is basically your bank statement overdraft. So did we match it? Yes, we matched it. So we good. All right, so this was method 1 if the question asked you to start with the revised cash book balance. If they, however, ask you to start with the bank statement balance, you have to follow what they're asking you for. You have to. So we will therefore start with the balance that they gave us, which is overdraft, 7,225, and notice it's in brackets to represent a negative figure. And then what do you usually do? You do the opposite. So when you start with your revised cash book balance, you add unpresented checks. You are starting with a different balance. So that means you cannot do the same thing. So that means this time you're going to add your unrecorded deposits. That was 13,000, so you add that up, 5,775. Then you're going to less your unpresented checks. Remember, we started with a different balance, so we're doing opposite. We're doing differently from when you start with your revised. So this one, we lessing the unpresented checks. Of course, you have your working, and it is 5,500. And do we get our revised cash book balance? Yes, we do. And you see that it matches, and we feel proud. Good. So just want to make sure that you guys understand this, that basically you follow the instructions. If they specifically ask you to start with the revised cash book balance, that is what you have to do. If they ask you to start with the bank statement balance, that is what you have to do. If they are specific and they give you that requirement and you do not follow, you are not going to get the marks. If they do not specify which one to start with, your choice. Knock yourself out. All right? So this would be your answer for June 2007 bank rec. Once again, notice it looks the same. Your solution looks the same. The difference is just in how they present the information. So very short video. I hope it was short enough and that you understand. Rewind and look it over again and you can slow it down, pause, whatever it is. All right, so goodbye.